Hello and welcome to the FinTech Finance Virtual Arena. I'm your host Doug McKenzie, and on today's very special session we're going to be looking at the next chapter in the payments industry, and joining me is Jon Lyons from TSB. Jon, how are you doing here today?
Hey Doug, good to speak to you. I'm doing very well.
That's brilliant to hear, and it's our pleasure to have you on because I'm really excited to kind of hear TSB's perspective on this. And well, I think the best way to kick things off is if you could tell our audience a bit more about yourself and your role at TSB, please.
Yeah, of course. So I've been here at TSB for about 4 years now. Before that, I spent a lot of time at RBS and NatWest. I'm the Director of Operations here at TSB. And alongside my operations responsibilities, I've also got accountability for procurement and the supply chain team, partnerships and open banking, as well as the sustainability agenda. I sit on some external forums, as most directors at banks do. So with the Bank of England, UK Finance and Pay.UK. And previously I've had the honour of being a non-exec director on a couple of external bodies like Vocalink and Chatsco. So that's me.
Incredible. Well, I mean, it's our honour to have you on the show because you're so firmly placed in the heart of all this. So I'm so excited to hear your perspective. Now, without having to delve into the pandemic too much, one thing that I'm quite excited to hear is how the payments industry itself has changed in the last year as a result of external factors.
What a year it's been. I was thinking about, today, and in some respects, nothing's changed. And in other respects, everything's changed. And the way I kind of tend to think about things is in layers. In kind of layer one is your central infrastructure. Layer three, if you like, is at the front end of the value chain, which is our customer experience. And then you've got the banks and the bit in the middle that does all the processing. And really, from a central perspective, central infrastructure, not much has changed. The agenda is the agenda. We all know what we're doing. There's a significant program of renewal and regeneration, covering CHAPS, RTGS, the new payments architecture, becoming ISO compliant. All those good things carry on. So in that respect, nothing's changed. It's a multi-year program. If I jump to the other end of the value chain, the customer end, everything's changed. Massive change in the last year. We've seen checks down by 24%. We've seen faster payments grow by 10%. And at TSB alone, we've seen our digital adoption, skyrocket. Now in excess of 90% of all of our customer interactions are digitally. So, it's changed a lot from a front end customer experience perspective. But for the banks in the middle, what's it meant for us? It's meant that we've had to, get used to working remotely, serving our customers from a distance. It's required us to accelerate our digital enablement. We've introduced things like Smart Agent, a web chat capability. We've done partnerships with Adobe to try and accelerate our interaction with customers digitally. And we've had to support our customers through some fairly difficult times, as many of the banks have done. So nothing's changed and everything's changed is what I would say.
Yeah, it's kind of the beginning of a new paradigm that is, it's the beginning of it, not really right at the heart of it. And all the exciting elements that can come out of that are yet to be seen. But I'm sure we're going to kind of learn about them over this conversation. Now, you have brought up the change when it comes to customer experience within a bank, and the fact that 90% are now done digitally, interactions are done digitally. That is an amazing feat, especially when social distancing is still while not mandatory, still quite important to a lot of societies. Now, with that in mind, I'm interested if we could burrow down into those customer demands when it comes to payments a bit further, because no one wants to make a payment. That's not really what people are doing. They want to, for instance, buy something off Amazon. So I'm interested to see, if people aren't thinking about a payment, how have customer demands in payments increased towards their bank?
Yeah, so have they increased? They've definitely changed, right? Because in some areas, their demands have decreased, as we talked about before in chat, but they've absolutely certainly changed. Increased demand digitally, just driven by the fact that people weren't able to travel. It's very obvious, and we've heard a lot of it, from a lot of the commentators across the industry. Particularly growth in mobile versus web. We actually, in some respects, see a decline in web usage as people really get comfortable with using their mobile device. Now, for TSB, we have a branch capability. We have a branch network. We're very proud of it, and it's part of our core proposition. So whilst the digital enablement has increased and customers enjoy that digital experience, that doesn't mean that we are leaving behind those customers that still want to operate face-to-face, analog, still work in the analog world. Yeah. And invariably, these customers are probably more vulnerable in society than others. So it's important that we don't all get carried away with this digital agenda and leave behind a very important part of our customer base. At TSB, we've got at the heart of our purpose, money confidence, and our purpose is to bring money confidence to everyone every day, and that means whether they're working online or they're coming into one of our high street branches. So, as I say, I think it's changed. Our customers like the convenience of digital, as all banks customers do, but they also like the comfort of knowing that they can walk in and get advice face to face if they need it. And that will continue, and we're already seeing that return with the traffic coming through our branches. The appointments being made is increasing every day as we all sort of spring back to life in the UK.
Yeah, and Jon, I just want to say I love that term, money confidence. It's something that's so important to not just reducing stress, but also just the betterment of millions of people's lives that maybe operate under the TSB network. And I think hearing that as being one of your core operatives is such a refreshing point to make, and I really appreciate that. Now, obviously, while we can't leave the people who would still like to operate on an analog format behind. By the same token, we can't leave the people that are very excited by new digital technologies. And I'm really interested to kind of hear from the operations side of things. Has this rapid digitalization of payments from the consumer point of view really highlighted maybe some of the failures from legacy systems?
Yeah, see, I don't see the two connected. I don't see a landscape of failed legacy systems across the industry, right? I think there are, banks have point issues. Everybody has incidents. We resolve them. We carefully navigate our customers through those challenges and restore the services. But fundamentally, do I think we, have a failing legacy set of platforms across the industry? I don't think they're failing. In some respects, they're incredibly stable. They're very performant. I think the problem is that they're not very quick to change. They're not very easy to change. Change takes a long time. It's quite costly, and it's very difficult to keep up with the pace of the demands of that front end of the value chain, the customer experience, which has great demands upon it. So I don't think we have a failing, landscape. Clearly, I think cloud will have its place. My view is that the customer experience or orchestration piece at the front end will be the place that moves first and will be choreographed or orchestrated on the cloud. And we're already starting to see a number of banks and organizations making those moves. I think the clearing and settlement for payments will follow at a slower pace once everybody gets comfortable with the resilience, the responsiveness, and obviously the security. We know it's an area that the regulators are particularly interested in, the bank's ambitions around cloud, and we certainly see a positive shift in their attitudes towards the exploration of cloud as a solution to a more cost-effective, more performant payments industry going forward.
I think that really is ultimately it's the bottom line, isn't it? And the change in the nature of payments from being maybe slightly more high volume, lower value has obviously bled into that. And I think looking at it from that perspective is going to be very important. Speaking of this bottom line, with the rapid increase in the volume of payments, while transaction value has decreased. How can banks like TSB stay competitive in the payments ecosystem, or is the role of a bank going to have to change because of that changing nature of payments?
That's a great question, Doug. More volume, less opportunity to charge for it, higher costs of old infrastructure, growing compliance costs as well. All banks are subjected to that. And the cost of putting in those new protections for our customers, confirmation of payee, secure authentication, all of that stuff just adds to the cost of delivering a basic compliance service to our customers. My view is, I think that the solution and the answer lies in a couple of areas. First of all, I think standardization and the consolidation of infrastructure to reduce the cost of ownership is going to be incredibly important, not just for the small banks, but also for the bigger banks. I think if you're a big bank with scale and a big corporate franchise and financial institution customers, you've probably got the ability to do that consolidation of infrastructure and standardize internally. For the smaller banks, TSB is a mid-tier bank where you might not have critical mass. You may need to seek partners to help you in that process. And I certainly see some of the smaller organizations that don't have critical mass using payments as a service. I see a number of the technology companies and payments providers looking to grow in this space. And it makes a lot of sense because you can share infrastructure and reduce costs. So I think the first thing is around consolidating all of that infrastructure. We've got too much of it, it's too costly, and the smaller banks aren't going to be able to sustain the cost of that over time.
Yeah.
And then I think the other area really is through proposition partnerships. How do the banks partner with proposition partners, third parties, to bring new services, new products to their customer base that enables them to drive business growth in their core business lines, but also to explore and drive new and other operating income that offset some of the burden of costs of being in the payments industry. I think so. Two areas that I think will make a difference to the economics.
Yeah. Now, you brought up the fact that there's less time to kind of hold on to that cash and see it through to the end to end. So what are some of the improvements, if we're talking about real time, what are some of the improvements that a bank like TSB can offer your customers beyond just faster payments? One springs to mind is, for instance, invoice attachments. Is that something that is in the realm of possibility for a bank like TSB?
Yeah, of course. I mean, we have a growing SME franchise at TSB, and our customers are desperate for the tooling that makes them more efficient. And I think all those things that sit around the core payments journey are going to proliferate. I think as we move forward, and none more so than in the SME market. Yeah. I guess my view would be that the pandemic has really accelerated that march from analog to digital, from cash and checks onto cards and bank-to-bank payments. And I don't see that reversing. Open banking is the really interesting area. That's growing significantly. I see it in the volumes every day. More customers are initiating payments from within third-party apps than they've ever done before. And I think those two things are significant weather vanes for us all. And post-pandemic, I see a growing proportion of our payments initiated outside of the banking mobile app through open banking, rather than in the traditional, bank mobile app. So payment initiation shift I can see happening as a post-pandemic theme. I also foresee a move from card acceptance to instant faster payments, particularly in e-commerce, as those smaller businesses try to avoid expensive merchant acquiring costs. And as this capability is now far more instant, it's starting to knock on the door of the traditional card rails as a viable alternative for the movement of money. And so, just over time, I think those two things are just going to drive a dematerialization of payment initiation, where actually the payment will become quite invisible and roll off the back of the customer experience, whatever the customer's doing, in whatever app or e-commerce experience they're in. And that may not just be for e-commerce. I could see that beginning to seep into the point of sale over time as well. So that's my view about life after pandemic and how real-time payments kicks on and creates more value to customers, both consumer and SMEs.
Yeah, I think, it's almost hammering against the door of embedded finance, isn't it? It's that ability where payments really become so invisible, isn't it?
Great phrase.
Yeah.
Embedded finance, love that.
And so with that in mind then, we've discussed the changing relationship, or at least the changing role that a bank will have because of all these, the shift within the payments industry. But one thing that maybe we do need to bring up, because it's so important, is the strength of a bank is your ability to remain compliant, and that the fact that your customers trust you. And one thing that is obviously also changing, as well as the technology, is the huge amount of international standards coming in and regulations within Europe when it comes to payments. We're seeing ISO 20022, and with that, what will this new legal ecosystem mean for your customers? How much work will you have to deploy to get the customers to adopt these new standards? You guys are going to do it perfectly fine, I'm sure.
Yeah, I think it's a bit more complicated for the bigger banks that have got quite complex corporate and financial institution franchises. It's a little bit more straightforward for core retail banks that have a small SME franchises and growing. I think the first thing to say is standardization and regulation in payments is a good thing, right? It's there to protect the customers and the stability of the whole ecosystem and give confidence. Back to that word confidence again. Message standards, move to ISO, more data, all helps with delivery, customer experience, the bank's ability to comply, the regulator's ability to oversight, and it just all seeps into a more robust and resilient experience. So that's got to be a good and positive thing. And as I said, remember, money confidence for everyone every day. If you can't get the basics right, then you're not going to win. And all this sort of activity helps. How does that translate into a customer experience? Inevitably, things like secure customer authentication, confirmation of payee, all very positive. But customers might start to feel that there's more friction in the customer experience in making payments than they've enjoyed in the past.
Yeah.
But recognizing that we live in a world where the levels of fraud are growing and financial crime is growing. It's a big issue. It's got worse through the pandemic. These are important things. And for the sake of a little bit of intervention that creates a better and confident and experience, I think that's good for not only our customers but also for the industry as a whole.
Yeah, it's a general move towards being the best version of maybe technologies that maybe some of the fintechs have been very loud about, but organizations like you can leverage in a far better way, and it'll be exciting to kind of see what you guys can draft from that point of view. Now, one thing, I guess, talking about the fintech banks is some have been, for instance, cloud native from the off. But we're now seeing organizations like TSB obviously enter into the cloud and then really be able to leverage and pivot almost, I won't say at the same speed, but at increasing speeds, which is only going to benefit your customers. So, do you think it's fair to say that cloud-based platforms enable organizations like TSB to adopt regulations and implement new products and technologies in a seamless and quicker manner?
I was with you until you used the word seamlessly.
Okay.
I'm always cautious about seamlessly, right? Inevitably, I think cloud could certainly make putting new services live a less disruptive experience. I absolutely feel it's got a role to play. Whether it constitutes seamlessly, I think remains to be seen. There is a huge amount of technical choreography that's required behind the scenes to make that possible, particularly when part of the customer journey is potentially in the cloud and part of the customer journey is on-prem within our banks. That transition back and forwards is something that needs to be seen and proven. But I think it's got a role to play. I think it will help with cost effectiveness, as we talked about before. And I think the real question for the smaller banks is, can they do this themselves? Do they have the critical mass to do it? Do they have the wherewithal to do it? And do they need a partner to do it with and help them? And if they do, how much does the bank do versus how much does the partner do? So I think we're going to start to see some real significant questions about how much of the end-to-end value chain for payment stays with the traditional banks as it has for many years, and how much of this now starts to sit in a much wider ecosystem for payments going forward.
Amazing. Now, speaking of going forward, then, if we're to wrap up, I'm going to throw quite a big question at you. Since we're already at real-time payments with the ability to add increasingly large amounts of data attached to each payment, send it cross border, almost real-time, where do you see the payments industry heading in the future?
Well, listen, I've been in and out of payments for nearly 30 years, and it's changed hugely, but I somehow feel that that's going to accelerate somewhat. So, I see three mega trends, some of which are continuations, some of which I think, potentially new. But, going back to my sort of layers of infrastructure, customer experience at the front end, and then the banks bit in the middle, I think central infrastructure, continued theme of renewal, increased standardization, transparency, all intended to drive better competition, openness and innovation, and increasingly protections for those that use it. And I think the road ahead is a long and windy one, would be my prediction. From a customer experience and a customer behavior point of view, I think digital adoption will accelerate. However, I think over time, the prominence of the mobile banking app will increasingly be replaced by, if you like, embedded finance and the payment initiation happening within a different digital experience than the banks, which will provide us with new and different challenges to consider. So payments initiation embedded in customer journeys I think will be a critical theme. So that leaves the bank sandwiched between a changing customer landscape and a changing clearing and settlement layer, and being squeezed on both sides. They're all going to get forced. We're all going to get forced into modernisation. TSB has already made very significant strides in putting modern platforms in place. Not all of the banks have. So the clear question for them is going to be, do they have the vision, the scale and capability to do it for themselves, or is there room for partnership for those that need help along the journey? Personally, I foresee smaller bank payment infrastructure and processing consolidating into a smaller number of payments as a service providers, yet running in cloud, either single or multi-tenanted occupation, with banks connecting their front-end experience through APIs, and then their back-end accounting and reconciliation through back-end APIs, with everything else in the middle being done by a provider. It's a commodity. You can't differentiate. You just need to find the safest and cheapest way of doing it. Yeah. But undoubtedly, I will be sitting in a deck chair in the sun by the time all of those three predictions come to conclusion.
Well, you know what, John, I think you've hit the nail on the head, and I love the phrase megatrends, because each three hits on almost a different point, but together come together, and how the whole industry is almost heading in that direction. So, Jon, I hope you have a great time in the sun when when it happens. But I'd like to say a big thank you for your expertise and your insight on this, because it really is almost like writing the tapestry as it happens. It's right at the forefront of everything. So, Jon, thank you very much for taking part today.
Thanks for having me along. It's been great fun.
Thank you. And also to our viewers, you can catch the rest of the series and much more over at ffnews.com, and of course YouTube and LinkedIn, where I'll see you in the comments. So once again, Jon, thank you very much, and goodbye.